Most crypto is just a ticker. This one might be the invisible layer underneath every AI agent that ever makes a payment. Visa scale, if the evidence holds up. And almost nobody sees it yet. This is TIBBIR, and this is the complete case. A few of my biggest calls on the channel: Tau at $8, Caspa at 1 cent, that ran to 20 cents at peak, TIBBIR at 2 cents in April of last year, now 7 times higher, among others. But what I'm about to walk you through isn't about price. It's about what TIBBIR might actually be, and why the biggest names in fintech, big tech, and US regulation are all pointing at the same unsolved problem it appears to be building toward. Quick version for anyone new to the project: TIBBIR is the ticker for an autonomous AI agent called Ribbita on VirtUAL's protocol on Base. Not a chatbot, not a tool you prompt. An actual piece of software that runs its own business without human input. It sells merchandise at Ribbita.ai. It takes real USDC revenue. It pays for its own compute. Every sale triggers a buyback and burn of TIBBIR tokens. It autonomously bought a CryptoPunk for nearly $300,000. Fair launch, 1 billion tokens. No pre-sale, no insider allocation, and the wallet that deployed it is on-chain, tied to one of the largest venture funds in all of fintech. That venture fund is Ribbit Capital, about $20.8 billion under management, the seed investor in Coinbase, the backer of Robinhood, the fund behind Nubank in Latin America, Revolut, Credit Karma, Persona, Crossmint, Plaid. 30 plus unicorns. Their logo is a frog. Their name is wordplay on the sound a frog makes. In 2 separate partner letters, they wrote about an AI agent with, quote, a particular interest in fintech and frogs. Every piece of infrastructure an autonomous financial agent needs: an on-ramp, a broker, global banking, identity verification, payment rails, an agent launchpad, Ribbit is a shareholder in. TIBBIR sits as the tradable expression of that stack. Every date, every address, you can verify on-chain yourself. But here's the thing. That stack isn't the full thesis. That's Act 1. Because here's the part almost nobody has connected yet. The merchandise store, the CryptoPunk, the buyback and burn, those aren't the product. Those are a demonstration. They prove that an autonomous AI agent can operate as a self-sustaining economic entity. But that demo isn't why a smart investor prices this at 500 million, a billion, or something much bigger. To see the real thesis, you have to understand one specific concept. And once you see it, you can't unsee it. The concept is KYA, know your agent. Here's the analogy. When you swipe a credit card, Visa doesn't move the money. Your bank does. What Visa does is answer one question: can I trust this person? That question gets answered billions of times a day. And Visa is worth around $500 billion for owning that answer. Now here's what's happening right now. Millions of AI agents are starting to transact on their own. Agents booking flights, agents buying storage, agents paying other agents for compute. Before any of that money moves, something has to answer. Is this agent who it says it is? What's its track record? Is it authorized to act? That's KYA, KYC, but for machines. One more angle. Think about DNS. You've never typed an IP address into your browser. You type google.com and something invisible in the background turns it into a server somewhere. You've never thought about DNS in your life, but if DNS went down tomorrow, the entire internet would stop working. KYA is that for the agentic economy. Invisible, but nothing works without it. Here's why I don't think this is a stretch. Independent sources from outside crypto with nothing to gain are all pointing at the same unsolved problem. Cloudflare, which processes roughly 20% of internet traffic, listed agent identity as problem number 1. Simon Taylor, a mainstream fintech analyst, said, quote, that agent wallet infrastructure doesn't exist, and almost everyone is looking for it. A One Research, an independent crypto research firm, called the identity layer, quote, the contrarian move. A Mastercard executive called KYA, quote, a pretty good business. In April, Visa shipped a product called Intelligent Commerce Connect that requires cryptographic KYA verification. The SEC categorized identity badges as non-securities, and on-chain agent registrations under a spec called ERC 8004 went from 337 to 162,000, a 480 times increase in months. Every one of these lines up on the same conclusion. The infrastructure for agent identity is missing. Whoever builds it could own something on the scale of Visa. Now let me argue against myself, because you should hear the honest counter. TIBBIR is still in stealth. There's no public code base for the identity layer, no white paper beyond the standard VirtUAL's template, no published team. Ribbit Capital has still never officially confirmed any of this. No press release, no public statement. 450 plus days of zero distancing isn't a denial, but it isn't a yes either. There are other identity projects chasing the same problem. Persona sits inside Ribbit's own portfolio. Multiple competing agent identity standards are live. This could end up being a long-duration stealth that never hits the reveal catalyst people are waiting for. The evidence for Act 2 is circumstantial. Strong, but circumstantial. If you want a project with a fully disclosed team, a public roadmap, and a tokenomics paper you can pick apart line by line, this is not it. You are buying the read between the lines trade. Here are the 3 ways to own this, ranked by upside math. 1. Portfolio convergence. TIBBIR has tradable exposure to Ribbit's $20 billion stack. If Ribbit ever confirms, it's a repricing event. If they never confirm, you still own the most strategically positioned agent token on base. That's the floor. Moderate to high upside too. TIBBIR as KYA identity infrastructure. The trust verification layer every autonomous agent needs before a transaction settles. Identity layers compound, every verified interaction deepens the moat. Payments commoditize, they compete to zero. Identity doesn't. That math is Visa math. Very high upside 3. TIBBIR as the cross-chain trust oracle. The invisible layer above every chain, every agent, every payment rail, answering, can I trust this agent billions of times a day? If that lands, you're not pricing a crypto token, you're pricing the Visa equivalent for machines. That is the ceiling case as framed by an analyst on X named at Altcoinist over 400 days into this research. All 3 can be true at once. Thesis 1 is the floor. Thesis 3 is the ceiling. Real quick, which of the 3 are you buying? Floor, middle, or ceiling? Drop it below. I'll read the top replies. Here are the numbers today. TIBBIR trades around 14 cents. Market cap roughly $148 million. Fully diluted valuation the same, because nearly all of the supply is already circulating. 71,000 wallet holders, all-time high of 44 cents in October. Currently down 66% from that high, and up over 660% in the last 12 months. The top 100 wallets grew their positions by over 43% in recent months, and in May of last year, TIBBIR held the single largest smart money dollar value position on the entire base chain, larger than Aerodrome. That's not a meme coin footprint. That's what accumulation looks like. Here's my take. Most people look at TIBBIR and see a Ribbit reveal trade. That's the floor. The real upside math is further out. This is the first token I've covered where independent sources from traditional finance, big tech, crypto research, and US regulators are all converging on the same unsolved problem. One project, in stealth with Ribbit Capital's wallet on its deploy contract, appears to already be building toward it. Most people haven't connected those dots yet. That is the opportunity. Let me separate signal from noise, because TIBBIR is volatile and the noise is loud. Ignore the hourly chart, ignore price action tied to random influencer tweets, ignore posts claiming reveal dates without receipts. What actually matters? Real merchandise burn rate, accumulation in the top 100 wallets, Virtual's ecosystem health and agent commerce protocol rollout, any direct on-the-record statement from Ribbit itself that remains the binary catalyst, and US regulatory clarity on tokenized agent assets. One important thing, this is a high-risk, high-narrative position. It does not belong at the center of most people's portfolios. Size accordingly, not financial advice. Do your own research. Here are the catalysts that would force a repricing. 1. Any official on-the-record statement from Ribbit Capital, still the binary. 2. Ribbita's merchandise revenue crossing a visible public threshold. 3. TIBBIR getting integrated into the agent commerce protocol inside Virtuals. 4. US crypto regulatory clarity in the back half of the year. Here is my stake in the ground. I called this at 2 cents in April. I think TIBBIR gets repriced through 2026, and I think a $500 million market cap gets reached before the broader market connects the dots on the identity layer. I'll defend that in the comments. If you're trading this rotation, here's my stack. I use Bluffin for perps, link below. For cold storage, I use Ledger after my own MetaMask hack a few years ago, story in the description. TradingView for charts, CoinTracker for taxes, all 4 in the description. Nothing costs you extra. That's the complete case for TIBBIR. If you want more sleeping giants like this one, real-time research drops on X first at @CryptoSGiants. Subscribe for deep dives like this every week. Links in the description, not financial advice. Do your own research. I'll see you in the next one.